The results are in, and it turns out investors aren't too fond of Aya Gold and Silver's second quarter performance. The stock last week closed down nearly 4% following the release of their Q2 results, before rebounding slightly on the Friday. By and large, the big complaint amongst investors here appears to be related to grades in processing. Those complaints began before the release of financials back when the company put out their production figures for the quarter and have continued right on through. And on that note, let's dive in. Despite the market performance, Aya, to their credit, posted record revenue in the second quarter of 2025, with top line revenue hitting just under $39 million. The figure represented an improvement of 182% on a year over year basis from $14 million, alongside an improvement of 14% on a quarter over quarter basis. The record figure follows silver sales of 1.1 million ounces at an average price of $33.86 an ounce, which represents improvements of 118% and 29%, respectively, from 2024's Q2 figures of 522,000 ounces sold at an average price of $26.20 an ounce. Unfortunately for Aya, however, cost of sales rose at a faster pace than revenue, with cost of sales rising by 239% year over year, going from $8.8 million to just under $30 million. Gross profit, as a result, improved from $4.9 million to $8.9 million, resulting in gross margin sinking from 36% to 23%. Operating income improved from $1.7 million to $7.3 million, while net income grew from $6.8 million or 5 cents per share to $8.6 million or 6 cents per share, an improvement of 27% year over year. The figure includes a one-time gain and impairment recovery from the sale of MX2 Mining, which on a combined basis accounted for $5.8 million, without which Q2 net income would have declined on a year-over-year basis. Cash flow from operations, meanwhile, totaled $7.8 million, as compared to $12.8 million in the year-ago period. Expenditures driving down cash flow during the quarter included $8.3 million spent on Zounder to advance surface infrastructure and underground development, and $3.5 million spent on further exploration and evaluation assets. The second quarter saw Aya end the quarter with cash and cash equivalents of $114 million, which is after raising gross proceeds of $105 million in June, issuing 10.8 million shares in the process. The company started the quarter with $18.3 million in cash. All right, let's move on to the production side of things where things were a little less rosy. Aya in Q2 managed to mine 241,000 tons of material. This compares to 114,000 tons in the same quarter of last year and 195,000 tons last quarter, but grades have fallen steadily. Last year in the same quarter, we saw an average grade of 176 grams per ton silver amongst mined material, which then last quarter was at 151 grams per ton silver, and now in this quarter we're looking at 138 grams per ton silver. A similar pattern was also seen on the processing side of things, with ore processed growing from 81,000 tons last year to 250,000 tons last quarter to now 273,000 tons of ore milled in the current quarter. Yet grades declined over that time frame from 176 grams per ton silver last year to 163 grams per ton last quarter to now just 140 grams per ton in the most recent quarter. Aya in the second quarter posted total silver production of 1.04 million ounces, as compared to 433,000 ounces in the second quarter of 2024. But quarter over quarter, it was a different story, with Q2 production falling from 1.07 million ounces in Q1. In other words, despite mining and milling more material in the second quarter than the first quarter of 2025, production actually declined. The bright side here is that Q2 marked the first quarter in which production was entirely in the form of silver ingots, with no concentrate being produced. But that decline in grade has a major impact on costing. Cash costs have risen from $17.85 per ounce of silver sold in Q2 of last year to $21.26 per ounce of silver sold in the most recent quarter, an increase of 19%. Quarter over quarter, costing, meanwhile, was up 12.3%. All-in sustaining costs were not provided by the company. One of the bright spots here is that milling operations have managed to process on average 3,000 tons per day, versus 2,800 tons per day in Q1 and just 885 tons per day in the same quarter of last year. While recoveries have improved to 86.5% from 84.7% a year ago and from 82.4% last quarter. The other major problem for Aya as a result of these production figures is the outlook. Current guidance, which management insists is achievable, calls for annual silver production of 5 to 5.3 million ounces. Simply put, Aya is not on pace to hit this target. Year-to-date production has hit 2.05 million ounces, and Q2 production will see them end up about a million ounces short of their target. On the Associated conference call, CEO Benoit Lassalle stated that recovery rates have now surpassed 90%, while processing rates are averaging 3,500 tons per day. But the big comment was that they are placing a focus on dilution, which is the big impact to current grades on the ore that is being processed. In essence, he blamed the expansion of the mine and processing rates on the dilution, which really boils down to we got ahead of our skis trying to process more and more ore, which really impacted quality. To rectify the issue, they've hired more personnel, including senior underground managers, to improve mining operations while mining ore more selectively. After the conference line was open to analysts, LaSalle then stated that July production exceeded 400,000 ounces of silver, which places them on a better trajectory to meet targets. But not everyone is convinced, with SCP still forecasting a sub 5 million ounce production figure for all of 2025. But production isn't the only issue as far as guidance goes. Cash costs for 2025 are expected to be in the range of $15 to $17.50 an ounce. Year to date, that figure sits at $20.14 an ounce, which is about 15.1% too high using the top end of that range. And then average grades are expected to be between 170 and 200 grams per ton silver. Year to date, average grades have hit 151 grams per ton, and they haven't hit the lower end of that guidance all year. Overall, as far as guidance goes, the only real figures being hit are recovery rates, which are to be in a range of 84 to 88%, which has averaged 84.4% year to date. Exploration and development expenditures in the first half hit $11.3 million, while guidance calls for $25 to $30 million in 2025. But that sort of spending tends to be more lumpy than other items. All right, so let's wrap it up. Q2 was a mixed bag for Aya. They're doing better than they were previously, but quite frankly, they aren't doing as good as they said they would be. Processing more ore isn't a great solution to production when the need for more ore just results in you processing more diluted material. That just results in basically what Aya posted for operating results this quarter. Whether guidance is hit this year obviously remains to be seen, but the first half wasn't a great start to hitting those targets. With any luck, the second half will go a bit better for them, but that remains to be seen. All right, everybody, thanks for watching. We are in the thick of earnings season. If there are stories you want us to cover, as always, let us know in the comments section. If you want more mining content, check out our website over at thedeepdive.ca. And if you enjoyed this video, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody, thanks for watching.